General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, doing the midweek. All right, confirm or revise anchor point. Thinking Tuesday low of the week. We respected 50%. It's obviously going to go down no lower, even though it's looking like it could be a Tuesday high as well. Depends on how we react to the earnings. Adjust weekly bias template. I'm bullish. No shifts in framework hit rate. The plans are flowing fine. I'm noticing the ADR is getting started in Asia. No Tuesday and Wednesday. Price run is happening outside regular trading hours, leaving slim pickings for the New York session. No case studies. I'm in week 4 right now. Kind of a small range week, but I'm still thinking we're going to go for these equal highs. Week 3, we didn't get. Week 2 high. The daily fair value gap is still holding. It's another week since this is a 5-week month. So this week I'm not expecting a 20% monthly TGIF like to create that week. Expansion mitigation signals. We mitigated the daily fair value gap. It's holding so far. No previous week's low was rated. The rate kind of counts for week 3. So this rate should hold for this to be truly bullish from a weekly perspective. Decision quality, much better. I'm seeing how it's supposed to be this. 1% a day focus plays out by looking for adjustments every day and trading while being human. Narrative framework accuracy. It's hard times being similar low volume, lots of moving parts. Experience success/failure. Success is showing up and really focus on what I'm doing and when I'm doing it. And then there's no case studies. So the chart work for Wednesday. Framework phase accumulation. Could have been accumulating orders and discount. Daily stance engaged. Confidence level medium. The reason we engage, we're seeing a price delivery signature. Anchor point confirmed. I'm thinking Tuesday. After internal range liquidity sweep, we went back above Monday's high. A suspension playing out, no. Somebody said today, no. Nasdaq on the N15. See how we came and got this low, then regular trading hours open, just completely one-sided. We would have had to catch it down here. Price sold off overnight, and regular trading hours bought up after the internal range liquidity sweep on the H1. So we're kind of back above Monday's high, kind of sitting on top of it. It's bullish. Interesting to see we didn't want to go lower during regular trading hours. Even when price retraced, value remained higher. So even while we was going down, it's like everything is drawing us higher. We could have did an OTE or something. We didn't do any of that. On the daily, it's a down close, whether it's spot was up close. But it just looks like we completed the retracement and we're ready to go back up now. And then the SPX 500, a lot more choppier. We've kind of been in these old in the week opening gaps forever. Still got Tuesday low of the week. Still got the internal range liquidity sweep. We respected this first value gap from Tuesday. H1. We open with that gap down. They probably panicking from the earnings. Alright, the way this week is developing, it seems very reversion to mean. The expansions are low quality and not trustworthy. Yeah, we haven't gotten good ones. We got this up close, so it's different. Up close day Monday, where money is flowing back into the market. So here we go. SPY, kind of playing around this weekly volume imbalance still. And then the Qs drop back into the new day opening gap. We still need to go up here. And then Nvidia, this is where the money's really coming in now. People are buying the quality, getting ready to hold. They stop like this now, it'll be terrible. You should see higher prices and closes above here, 215. It's the engagement day. Did gold today because the 80 hours maxed out on Nasdaq, but this 80 hours almost maxed out. We still had room to go, but the move was pretty much done. The candles got too little. 80 hours maxed on Nas, so I look towards gold for the bonds. Got a couple of scratches as the move was almost over to. Got to show up earlier. Got to get in there earlier. Did I follow the plan? Yes. If not, what caused it? Getting more confidence in my execution. What did I do well? Took the trade. What will I do differently next time? Try to get more earlier. This late move and middle move and low volatility don't yield as much. Alright, did the framework play out? No, I was expecting more bullish price action. What did I learn about patterning? Perfect does not exist. You have to focus on growth. What will I watch for tomorrow? We got unemployment for the US and the Euro has monetary policy. That's going to be big. Alright, that was all the chart work. Y'all have a good day. Peace.